Good morning, everyone. This is Daily Trading Analysis with the market forecast for today, February 24th. Today is a big day with PCE and personal income and spending coming out. We are expecting PCE to relax because remember, PCE is the preferred measure of inflation that Fed likes. So personal income, we would like to be basically lower, but we are expecting higher income and way higher spending. Remember that in yesterday's video, I was reviewing the kind of consumer spending that we've been getting since last year. Basically, US consumer is in a spree of shopping, and they are not taking money from their accounts, but they are going on an incredibly high credit card debt. So this is going to be reflected in the personal spending, because from low spending, I think we are going to get on January, due to holidays and sales, way higher spending and income. Hopefully we don't get too much of a high, because the more money US consumer has, the more spending they do, the more Fed will hike interest rates. And today is going to be really important to have that kind of picture for the upcoming weeks and the upcoming March FOMC interest rate hike decision. So I think that PCE, these numbers are key, but also don't forget at 10 a.m. new home sales, home sector is getting cooled down. And I think it's quite interesting to see how the home sector is really showing contraction. And that is what Feds want. So this number is also to be important, and consumer sentiment and expectations, the final number that I think we have to watch out. Also, 15 minutes after 10:15, two Feds, Jefferson and Mester, are going to have a speech. Every time Fed talk, it's important to be aware of that, because markets volatility are insane. And right now, with today's PCE and more economic data that is coming out, they are going to have an impact. So be sure to be aware of these two Feds speaking. And the rest is we have to wait, to be patient, and to react to these numbers. That's the most important thing. So I would like to tackle yesterday's price action, basically. So as you can see, yesterday, we didn't sell off. We were trying to do that, but we ended up with this beautiful bottoming tail. If we check the 5-minute chart, we can see that we sold off after the open pretty heavily until this 200 EMA that you can see in the daily. So the 200 EMA is providing support. This is not casual. This is one of the most charted indicators in the world that overall big funds, traders, investors of any kind are watching. So this is quite good to see, because we are finding support at this 200 EMA on the daily. But I'm not really here. I don't want to focus on that. Apart from that, this V reversal was super aggressive. And I think this took a lot of traders by surprise. And let me tell you, there's a story behind this kind of move. Because basically, a zero DTE, you know that short-dated options trades are basically, since the last month, are in a tremendous hype and FOMO. There's a lot of traders that are taking advantage of these 0 dates to expire options. They are basically gamblers. And basically on Thursday last week, 26,000 put options of those 0 DTE on the S&P 500 E-mini futures with a strike price of corresponding to the 4,000 level were bought on Thursday. Expiration date 23, yesterday. And as you may know, if you don't trade options, this is what they do when they buy a put, when they buy a put, that's an option contract that conveys the right to sell a security at a fixed price. So they are buying the right to sell the underlying asset. When they do that, basically the other side of the trade, in order to hedge their own risk, they sell that in order to take advantage of this guy. So basically what they did is 26,000 amount was an insane level. So what Wall Street did is one of their best tricks. They sold to hedge that, and then they didn't want to pay that. So basically they manipulate the market down to take advantage of their hedge positions, and then they buy again in order to these kind of traders that bought put options to not pay them. This is the kind of things that they do also last week on Thursday week option expirations, when they do manipulate the market to avoid paying the high amount of open interest that they have on the options, depending on the side. So basically, those traders or that guy bought a lot of puts, and Wall Street hedged that move, and later on in the afternoon, they bought up not to pay that guy or those traders, those 26 puts. So welcome to the markets and welcome to Wall Street manipulations. If you didn't know that, that's what happened yesterday. So this was not a natural move based on fundamentals. This was part of the move, but it was an increased sell-off due to these options expirations. But this kind of move, the other one, is what I'm trying to highlight here. This is artificial move, manipulated move. So what is happening right now in overnight? Well, we are selling off. We are not accepting this kind of price action because basically in overnight there's a lot of short inventory, and we are all in the red. Tesla, Microsoft, Apple are all gapping down with a VIX in the 2%. So be careful with the kind of things that you think about these V reversals, because I still think we are going to continue down. This looks like a bear flag. Basically, we are seeing how markets sold off, bounce, some kind of tricks happened, and I think we have to watch, really pay attention to this 200 moving average on the daily, because if we break this, I think both traders that got hyped yesterday buying longs and taking positions off the 200 EMA, 200 moving average, this wide line, are going to be stopped out. And I think the selling pressure will increase because under this indicator, under the 200 EMA, shorts get super aggressive. So be careful with today's price action, because it's going to be quite interesting, not only because we have some fundamentals economic data happening, but also because we have this technical point below 12,000 is going to be quite interesting. So I'm watching today, basically yesterday's low at 12,000, almost flat, 12,028 on the Nasdaq, and on the S&Ps, we are watching 3,975, 80, something like that. If we check the 4-hour, we have this support at 3,900, sorry. So I think this kind of move on the S&Ps is able to happen today, but we have to react. And I will be reacting once we cross below this support. So also about that situation, if we check the daily, well, we have 1, 2, 3, and 4 rejections. So big resistance since September until the big kahuna sell-off at 13th of December on CPI, this sell-off. And then we bounce, triple bottom almost. We started this huge rally since 2023, and we cross this previous resistance, we bounce, and we are now down below. So previous resistance is now becoming, it was support, but it's now being rejected. This pivot is super important. So if you are long, I think this is the spot that you have to watch. They have two plans. Either we hold yesterday's low and this 12,000 on the Nasdaq, and we bounce and we break out of this pivot and last week low, and we go long. Or if we break down this pivot at 12,000, below 12,000, I think is a short. So what's the potential for both moves? Basically, if you are long, I think you have quite the potential to repair those. So you have a 2.34% of risk of profit risk to reward ratio. And I think it's good. It's good, but I don't think the trend is for long. I will be looking for shorts with this kind of thing. I will be looking for this, and the risk is going to be basically pre-market. So this is a 228, and I think this is going to be my preferred option to go short and to try to take advantage of the change of pattern. This is a change of pattern in my opinion, and I think we already topped out. We trapped a lot of longs yesterday, and I think we are going to continue low, breaking down this pivot and going down below 12,000. So that's my plan. Regarding the rest of the markets, dollar is continuing showing strength. Quite interesting, because as interest rates go higher, people will start going cash. And being cash, being in dollar specifically, has a lot of power when these interest rates go higher and higher, and there's no other asset better than cash and forex markets to really go defensive. One of the best markets. The other markets are one of the sector funds that we'll be reviewing in a few minutes. Apart from dollar, yields are again holding all in the green, and the 2-year, the 10-year are bouncing, trying to pull back a little bit. Let's see if the 10-year bounces off 390%. And let's talk about terminal rates. Terminal rates are still at 5.35. I remember where people were talking down here at 4.8 that 5 is going to be the terminal rate. Well, welcome to the new world. Fed already warned us about this. And we are talking about 5.34 interest rates, terminal rates. This is going to be insanely painful. And on December, 5.22, basically no pivot this year. Bonds market are telling us, well, Fed was right. I think we are not going to see any interest rates cut on December. So let's review a little bit more about that probability with the Fed Watch tool. This is for March, for the upcoming FOMC. People are starting to bet and to think about maybe 24% of probability to go 50 basis points. This is going to kill the market for sure, but let's try to think more in the mid-long term along this year. If you check this, you can see that on September, we are at 5.25. There's a lot of probability stacked there since May or since June. So since June, I think we are going to be more and more, even though more than we expected, and as Fed was saying, higher and more time at those levels. So 525, 550 is going to be insanely high. And this is still, I think, the question. 30% for that cut from 525 to 5 or not, or stay there. December is still adapt question, but what is true is that more and more people are starting to think about 5 0.25% terminal rate. And this is going to kill any kind of tech stock, gold stock, commodity that doesn't want high interest rates. So be careful with the kind of position you take and the kind of markets you trade, because you need to be aware of these kind of things. If you check the gold, well, gold hates high interest rates, and we are going down and down and down, and this is the daily. And on the 30-minute chart, there's a lot of potential downside if we break this. This is a descending triangle. This is quite bearish, and if we check the previous support, well, we broke that, and we have this pivot, this zone with the 200 EMA that may provide support, but I mean, gold is super bearish. This is one of the assets that hates in high interest rates. And I think finally, I would like to talk about the sector funds performance and the kind of defensive rotation that I've been sharing in my channel. I'm sharing with you now again. Yesterday's technology was super hot, XLK and energy. But if you take a look to the 5-day performance, we are still seeing XLP, XLV, XLI, and XLU. All these sectors are defensive sectors. They are still up there. So be careful, because sometimes things look like something, but Wall Street is playing some tricks due to options. But these kind of things, this kind of money flow rotation from big, huge funds are telling you something different. And they are continuing going defensive. And when big players go defensive, you have to pay attention. So final remarks on the Nasdaq. Let's see. Well, we are slowly grinding down. This started at 3 more or less. That's London open. So let's see if these overnight shorts get paid. And remember, I'm going to pay attention to this low and this high up here. These two levels are my preferred levels to break the structure. Yesterday's price action was a lot of manipulative. A lot of manipulation happened yesterday, but I would like to react to these two spots. So that's my plan. And let's see what happens. I will be patient and I will react to what I see. As always, thank you for your time. If you found this video useful, please remember to click the like button and subscribe to the channel. Support my channel and support the effort that I take every day for you to understand the fundamentals, the technicals, and overall news of the market. Remember that I upload new videos every single day for market forecast, market updates, and market recaps. I appreciate your time and see you in a couple of hours with the market recap. Remember that discipline and risk management are key for success. Stay safe, everyone. Be patient, because today is going to be pretty volatile. Friday with PCE inflation number, I mean, there will be a lot of opportunities. Stay safe and see you later.